Second variety of problems asked under redemption of preference shares when preference shares are redeemed at premium. Previously, we worked out problems where preference shares are redeemed at par. Now we'll go to a problem. The balance sheet of Bhaskar Company Limited as on 31st 3 2018 was as follows. Liability side 8% preference shares of 10 each 15 lakhs, equity shares of 10 each 27 lakhs, share premium 3 lakhs, general reserve 6 lakhs, profit and loss account 7 lakhs 50,000, current liabilities 8 lakhs 40,000. Asset side land and building 23 lakhs, plant 9 lakhs, furniture 6 lakhs, investment 8 lakh 40,000, stock 9 lakhs, debtors 4 lakh 50,000, bank 70,000. So balance sheet total is 66 lakh 90,000. The company decided to redeem its preference shares at a premium of 5% on the following term. Number 1. A fresh issue of equity shares to the extent required was made at 20% premium. Second, all the investments were sold at 8,10,000. Third, the directors wish that profit and loss account be fully utilized and rupees 1 lakh be left in general reserve account. Now, question: pass the journal entries, prepare equity share capital account, share premium account, and bank account. And the third question is prepare balance sheet after redemption. There are 3 questions asked in this problem, and this problem is relating to redemption of preference shares at premium. And here in this problem, a fresh issue of equity shares have to be made, but we don't know how many equity shares are issued. The new fresh shares, the number is not given. So before starting journal entries, we have to prepare note, because in this problem fresh issue of shares are given, but how many fresh issue, that means number of fresh issue of shares not given. So we should find out how many equity shares are to be issued newly to redeem the preference shares. So first let us see how much money we need. That means what is the amount required totally to redeem the preference shares. Okay, what is the total preference shares to be redeemed? That is 8% preference shares of 10 each, that is 15 lakhs. That is the nominal value of preference shares which are going to be redeemed. But it is not redeemed at par, it is redeemed at premium. So what is the premium amount? It is 5%. So 5% of 15 lakhs is 75,000. So together we need 15 lakh 75,000. So what we have to see? We should see how much money we have, how much reserve we have in our hand. If not sufficient, remaining amount we will arrange from issue of equity shares. So let us see how much money we have, what is the reserve we have, what is the amount available to redeem preference shares, right? So let us see. They have given, third point they have given, directors wish that profit and loss account be fully utilized. That means whatever balance of profit and loss account we have in our balance sheet, that can be completely utilized. That means how much we have? 7,50,000. See, amount available to create CRR, that means capital redemption reserve, profit and loss account, completely we can take 7,50,000, completely we can take. But from that 7,50,000 profit and loss account, the investment were sold for 8,10,000. Given in the legal provisions, that requirements, conditions, there we have given, when any asset is sold, its profit or loss should be considered. If it is sold at loss, whatever remaining amount, that can be utilized for capital redemption reserve. So see, here investments are sold for 8,10,000. What is the actual amount of investment in the balance sheet? 8,40,000. So 8,40,000 is the actual value of investment, but it is sold for 8,10,000. So there is a loss. Actual balance sheet value is less than actual what we have received by selling that investment. So 30,000 we have, company has incurred loss by selling the investment. So that investment loss has to be deducted. 30,000 investment loss has been deducted from 7,50,000 profit and loss account balance. So available amount for CRR to create CRR is 7,20,000. That is the one amount we got. This is the one of the divisible profit we are utilizing to redeem our preference shares. Next, go to the third point of the problem again. 1 lakh be left in general reserve account. So in the general reserve account, 1 lakh we have to keep. Remaining amount we can utilize for CRR. So let us go to general reserve of balance sheet. Liability side, general reserve, it is 6 lakhs. Out of 6 lakhs, 1 lakh should be left. Means 1 lakh we have to remain in general reserve account when we continue in future years. That means in the new balance sheet, general reserve balance should remain at 1 lakh. Remaining amount we can use for CRR. CRR means capital redemption reserve. So there we are getting 5 lakhs rupees. 6 lakh is the balance sheet value. 1 lakh we have to continue in the reserve account. So remaining 5 lakh is available for CRR. So 5 lakh rupees we are getting from general reserve account. Now let us see how much we have in CRR account, which we have taken from divisible profit. From profit and loss account we got 7,20,000. That is 7,50,000 minus 30,000. 7,20,000 we got from profit and loss account. 5 lakh we got from reserve. So together we get 12,20,000. So that much money divisible profit we have for redemption, means repayment of preference shares. Remaining amount we have to arrange by issuing equity shares. So let us see how much we need by issue of new equity shares. So what is the amount required? 15 lakhs. Remember always the premium is not arranged with this. Premium we have to arrange from any share premium account or from any divisible profit. Here that 75,000 of premium which we are paying on redemption, that 75,000, that can be made available by share premium. In balance sheet we have share premium 3 lakhs. So from that enough sufficiently we can arrange for this 75,000 of premium. So now we have to go for only the nominal value of preference shares which are going to be redeemed, that is 15 lakhs. For 15 lakhs already we have 12,20,000 which we have arranged from profit and loss account and reserve. So together 12,20,000 we have. Actually we need 15 lakhs. For 15 lakhs minus 12,20,000 is together 2,80,000. So this is the amount we need by issue of equity shares. So let us see how many shares we have to issue. That is, it is going to issue equity shares of 20% premium, but the face value of the equity share is 10 only, because as it is in the balance sheet already we have equity shares of 10 each. So now the fresh issue also will be in the face value of 10. So 2,80,000 is the amount required for issue of shares, divided by the face value of the share is 10. So total number of shares is 28,000. So we are going to issue 28,000 new equity shares at a premium of 20%. So 20% premium on 2,80,000 is the 28,000 shares into 10 will be 2,80,000. 2,80,000 into 20%, it comes to 56,000. That is the amount we get from premium on fresh issue of shares. So now the working note is over. Now let us go to journal entries. In the books of Bhaskar and Company, journal entries, normal columns, number, particulars, ledger folio, debtor and creditors. So first entry will write for, there is no hard and fast rule that which entry should be written first. We can write any entry of arrangement of fund. But last two entries should be one for due preference share, that redemption of what is the amount we are paying preference shares, that is due, and finally the payment. That two entries should come at the end. Other entries, arrangement entries, we can write anyhow. There is no order for that. So first we will write the entry for the fresh issue of shares. So we are going to issue 28,000 shares. So the equity share capital is 28,000 into 10. Okay. So to equity share capital 28,000 into 10, and the share premium is 28, it is 20%, 2,80,000 into 20%, we have already calculated, 56,000 we already got. So together total of that is 3,36,000 is a bank account. By issuing new shares we are getting money, so bank account debtor to equity share capital account to share premium account. So being 28,000 shares issued at 20% premium. Let us write the next entry for sale of investment. By selling investment we get money. That's why bank account debtor, it is sold at loss. So profit and loss account debtor to investment account. Investment account is the balance sheet value 8,40,000. Bank account is the actual amount we are receiving. That is the sale proceed of the investment 8,10,000. The difference is 30,000 loss. It is transferred to profit and loss account. Next we'll arrange for the premium. how much premium we need for redemption? 75,000. So that we are arranging from share premium. Share premium, see the balance sheet, we have 3 lakhs. So from that sufficiently we can arrange. Let us transfer it to the premium on redemption of preference shares. So share premium account debtor to premium on redemption of preference shares, that is 75,000. That is the premium which we are going to pay at the time of redemption of preference shares. 75,000 being the premium on redemption of preference shares transferred from share premium account, sourced from share premium account. Next one is the fourth one. Fourth one will transfer the fund to the CRR account. From profit and loss account, we have taken 7,20,000, that is 7,50,000 balance sheet value minus the loss on sale of investment 30,000, that equal to 7,20,000. General reserve 6 lakh is the balance sheet balance minus the 1 lakh rupees which we are going to continue in the reserve account. 5 lakhs. So totally 12,20,000 we got from divisible profit, that is profit and loss account, and reserve that we transferred to CRR account. CRR account means capital redemption reserve account, being the amount transferred to CRR. Next, now last final 2 entries, that is the amount due and amount paid. So 8% preference share capital account, that is the nominal value of the capital, preference capital 15 lakh. Premium on redemption of preference shares, that is a premium which we are going to pay on the time of redemption 75,000 to preference shareholders account 15 lakh 75,000, being the amount due to preference shareholders. Next, final entry, payment entry, that is an opposite entry to the previous one. Preference shareholders account debtor to bank account. Finally, the preference shareholders are paid whatever amount they are getting. Nominal value of preference share capital, that is 15 lakh, and 75,000 premium, together 15 lakh 75,000 they are getting at the time of redemption. So if the journal entries are written, ledger accounts are easy because it is just posting. First we have open equity share capital account, ledger account, debit column and credit column, both the sides particular. First we will transfer the capital, as capital is a liability side in our ledger account, it is in the credit balance. First by balance it is 27 lakh as per the balance sheet. After that again there is a fresh issue of shares. The equity share capital, the first entry to equity share capital, that is a transfer entry by bank account 2,80,000. Total 29,80,000. So in the new balance sheet our equity share capital balance will be 29,80,000. Next we will go to share premium account, that is also a liability. So by balance, first balance in the credit side, by balance brought down 3 lakh, that is the balance sheet value. After that we got 56,000 by issue of the new shares, 56,000 we got, and we have transferred to the redemption of preference shares 75,000 to pay the preference shareholders. So to premium on redemption of preference shares 75,000, balance is 2,81,000. This is the amount which you are going to write in new balance sheet. Let us go to bank account. Bank account is the bank is the asset side. So starting balance in the debit side. To balance brought down 7 lakh. Then by issue of equity shares we got 2,80,000. Share premium we got 56,000. By selling investment we got 8,10,000. And we paid the preference shareholders 15,75,000. Final balance is 2,71,000, which will be appear in the asset side of the new balance sheet. Now we'll write the new balance sheet. New balance sheet, first we have written bank. Bank as per the bank account, final balance is 2,71,000. Land and building as it is in the previous balance sheet 23 lakhs. Plant as it is in the balance sheet 9 lakhs. Furniture same, no change. Stock same, no change. Debtors as it is, no change. We'll go to the liability side. Current liabilities as it is, no change. General reserve. General reserve we are going to continue with 1 lakh rupees balance, so that we have written. Equity share capital is the new balance of your equity capital along with the fresh shares, that is 29,80,000. Share premium. Share premium again, share premium account. See the final balance 2,81,000, that will transfer. Then CRR account. CRR account what we are transferred. See the fourth journal entry, profit and loss account 7,20,000 and 5 lakh, together 12,20,000, that is CRR 12,20,000. So balance sheet total is 54,21,000.